I was, wow, this is pretty interesting. This could be transformative. And I said, Art, big could this be? Back when it was $250. And he said, well, how big is the US monetary base? So back then it was $4.5 trillion. Today it's $7.5 trillion. That should tell you something. And he said, well, there's your answer.
Wait a minute, everyone. Welcome to Bitcoinzilla, your platform for daily cryptocurrency analysis and news. Our mission is to keep it simple. Bitcoinzilla offers engaging information that is easy to understand. Our analysts keep their eyes on the latest news to provide valuable insights via email. Don't miss out on this opportunity. Join our community of 10,000 subscribers and experience the new edge with Bitcoinzilla. Subscribe now. In today's video, Cathie Wood discusses everything happening in the rapidly changing and still nascent Bitcoin ecosystem. What does this Bitcoin halving represent as symbolic of Bitcoin as a monetary system? So without wasting any time, let's dive into the video.
This takes us back to our early days with Bitcoin. And in learning about it and writing our first white paper in 2015 in collaboration with Art Laffer, when he read through the white paper, he said, whoa, wait a minute. This is what I have been waiting for since we closed the gold window in 1971. He said, I have been looking for a rules-based monetary system. And he was, fascinated by it, and increasingly so. Rod, you've met him. He's in Tennessee as well, Nashville. And he's so excited about the idea that we could be returning to private money and to get the Fed out of the equation. Now, I can tell you as an investor in the equity markets, the idea that Fed Chairman Powell can come out and all of the other governors can come out and say boo, and the financial markets freak out. Everybody freaks out because what they're saying is it's really been quite disruptive, and increasingly so in the last few years. So this idea of, a global, digital, decentralized, private, no government oversight, rules-based monetary system is a pretty provocative, profound, having been through many cycles since the late 70s when I was in college, but I entered the financial markets at that time. And, I just saw money unhinged in my early days, and have been a student of, well, okay, how do we change this? And so when we stumbled upon, everybody stumbled upon Bitcoin, or at least I did. And I was, wow, this is pretty interesting. This could be transformative. And I said, Art, big could this be? Back when it was $250. And he said, well, how big is the US monetary base? So back then it was $4.5 trillion. Today it's $7.5 trillion. That should tell you something. And he said, well, there's your answer.
Ethereum co-founder Joseph Lubin believes the United States Securities and Exchange Commission is intentionally hindering innovation, which threatens the country's existing financial landscape. Speaking at FT Live's Crypto and Digital Assets Summit in London, Lubin unpacked Consensus's decision to sue the SEC after receiving a Wells notice from the U.S. securities regulator. The SEC appears to have reclassified Ether as a security without telling anybody that that's the case. They are going about a strategic series of enforcement actions, rather than open discourse and clear rulemaking, Lubin said. The CEO of Consensus, which developed the MetaMask wallet, said the enforcement actions intend to create fear, uncertainty, and doubt for the cryptocurrency industry in an attempt to paralyze and force the company offshore. Lubin said the firm's counteraction against the SEC is aimed at getting more clarity from U.S. courts, considering that the Commodity Futures Trading Commission had previously classified Ether as a commodity. The Consensus CEO also highlighted the upcoming deadline for the SEC to issue a decision over the approval of Ether spot exchange-traded funds, ETF, as a driving force behind the regulator's renewed enforcement action against Ethereum. We believe that there's a flurry of activity designed to enable them to say that their action wasn't capricious in the very likely event that they deny the Ether spot ETF, Lubin explained. Lubin said the SEC had noticed how much capital had flowed into the ecosystem following the approval of spot Bitcoin ETF. I think they're concerned that so much attention and capital will flow to our ecosystem, considering it is improving enormously in terms of scalability and usability. Lubin also speculated that the prospect of the banking industry's customers moving assets into digital forms using decentralized finance constructs could scare many banks and other financial institutions. The SEC probably doesn't want to see a wave of innovation that will really transform the landscape, he said.
And so we've been running with it ever since. Could it serve the three roles of money? That was our first white paper, and we concluded yes. Could it? Is it ringing the bell for a new asset class? Yes, but in terms of this monetary system idea, the halvings, this one coming down from 1.8 to 0.9, is taking the growth rate of the Bitcoin supply below the long-term average of gold supply growth. And but the difference is, and when I say this to people, it's an aha moment for them. The difference is when the gold price goes crazy to the upside, miners come out and start mining more, and send the supply growth up. And when I tell people, in the investment world, that that's not possible with Bitcoin, it's just not possible. Again, they do a double take. And so here we are for the first time below the growth rate of gold. And as Stan Druckenmiller says, gold is a 5,000-year brand. That's what he says, at least how he says it. Bitcoin's a 10-year brand, and I should pay closer attention to it. And I think the halving is another one of those aha moments. I think in the and Yassine, you can corroborate this, but in the financial markets, because the spot Bitcoin ETFs have been approved, and there's been, I don't know how much is the net new, Yassine. I don't know, it's billions have come in. And these are people who, many who probably were not in the last halving and or in Bitcoin during the last halving. So it's going to be, and they come in saying, oh, with the halving, that means Bitcoin, the Bitcoin price is going up because they saw it in 2017. There was a little bit of a wobble before it happened in 2021. So there are expectations built into the financial market. This is a great thing, and Bitcoin's going to go up because of it. But we have a whole new layer or kind of player in the Bitcoin ETF, and it'll be interesting to see their reactions if this doesn't go as planned. Oh, halving, and then it goes up.
Bitcoin aside, the cryptocurrency market could find its local bottom in June, marking the start of the next altcoin bull cycle, according to market analysts. Based on historical chart patterns, altcoins could be set to find their local price bottom around the beginning of June, according to popular crypto analyst Rect Capital, who wrote in a May 8 X post. Altcoins are following the plan perfectly. Altcoins bottomed in early February. Altcoins sold off around the BTC halving. Altcoins to bottom early summer. The altcoin market took a beating in the past month. The market cap of altcoins, excluding the 10 largest cryptocurrencies, fell over 21% during the previous month to $265 billion. The M2 money supply estimates all cash and short-term bank deposits across the United States. As the money supply in the world's largest economy increases, part of the new supply could find its way into altcoins and memecoins, contributing to the beginning of the altsen. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.